Okay. Start now?
Yes.
Okay, good evening, everyone. I am Hibatalla Adam, Assistant Professor of Economics and Assistant Dean for Academic Affairs at Jindal School of International Affairs and the Executive Director of Jindal Center for the Global South at OP Jindal Global University in Haryana, India. I am delighted to be with you today, moderating the third special plenary session of the first international conference of Jindal Center for the Global South, which is on the topic of financing for development, 2030 global agenda and post-COVID-19 challenges. This conference is organized in collaboration with the Indian Political Economy Association and the Institute for Global Dialogue in South Africa. Achieving financial inclusion and financial security is not an end in itself, but a means to an end, which is, of course, to alleviate poverty. So it is broadly recognized as critical to reducing poverty and achieving inclusive economic growth. Greater financial inclusion is one of the key priorities of the United Nations Sustainable Development Goals, as it enables households and informal economies to increase resilience and capture economic opportunities. So the development of information and communication technology applied to financial services provides new opportunities to increase financial inclusion, but also requires greater financial awareness and literacy. So therefore, in this panel session, we'll be focusing on financial inclusion in the digital age. And in this challenging context, the questions that arises are, what are the policies needed to promote financial inclusion in the digital age? How to leverage digital financial technologies during the pandemic? Can we look to the other side of the COVID-19 pandemic crisis and say that the COVID-19 crisis can be a game changer for digital financial services? So in order to find out answers to these questions and also to cover the topic of our session today, we have invited for our session a group of experts in their field that I would like to start by giving a brief introduction about them to our followers on YouTube. At first, we are having with us Professor Angela Lyons, Professor and Director for the Center for Economic and Financial Education at the University of Illinois at Urbana-Champaign in United States. Professor Angela has got her PhD from the University of Texas at Austin. Her research interest is in financial inclusion, financial and digital literacy, poverty and wealth inequality, and the financial security and protection of vulnerable population. She has assisted over 40 countries in designing practical and sustainable models to improve the economic and financial resilience of communities worldwide. And she is also a member of the T20. And I hope that she will be able to give us some information about the T20 today. The second professor that we are really honored and delighted that she has accepted to join us today, we are having with us Professor Tara Nair, and Professor Tara is a professor at Gujarat Institute of Development Research in Ahmedabad. Professor Tara, her main research is concerned with issues related to policy and institutional development in the areas of small and microfinance, financial education, women empowerment and development, livelihoods and political economy of media. She has contributed to the discourse on Indian microfinance in the late 1990s through research studies and policy critiques. Particularly, she has looked at the connections between the moral, social, and economic aspects of the working of microfinance in India. And she is currently working on a monograph titled Finalization at the Margin, We are really delighted and honored to have with us today the two eminent guest speakers from United States and India. And I really appreciating that they have making time in their busy schedule to be with us live today. So I'm honored to invite Professor Angela to share with us her valuable insights on our session topic. Professor Angela.
Thank you. Thank you, Dr. Adam. I'm going to share my screen here. So I want to first thank Dr. Adam for such a kind invitation to talk today to all of you. I guess good evening, good morning, good afternoon, wherever you may be. This is greetings from the United States, so I'm happy to be here and happy to be such a part of such a wonderful event. So the theme of this conference that I've been picking up on here yesterday and today, we're looking at financing for development with the 2030 Global Agenda and looking at the challenges and opportunities now around the COVID-19. And so what I wanted to do in the short amount of time that I have is just share some perspectives from my views in working with different countries and the T20 of what we're seeing in the space on financial inclusion in the digital age and why this is so important. So yesterday, today, tomorrow, you are constantly hearing about the SDGs and the importance of those and the focus right now, especially with the 2030 agenda. And around all of those, we see the importance of financial inclusion in the digital context. There have been some efforts recently to directly try to help us make those links and digital connections to the SDGs. I know that ITU has a wonderful source that has helped to try to map those out. And I highlight 9 of these in particular that have tended to be in the areas that I have been working in. And what we see with all of these efforts is that there is this movement to eliminate poverty, to try to find solutions to the other 16 SDGs, but all of them, if you look at these mappings and the patterns that we're seeing that are coming out, there are direct linkages making connections to financial inclusion, and especially now digital financial inclusion strategies. And these are powerful tools in making progress towards the SDGs. If I give you just the most basic example, when we look at the focus on traditional bank account access, we see that many countries have made great strides towards increasing access to bank accounts and other financial and digital services for the poor. But while we've made great strides, we still see some inequalities and some major inequalities. While progress has been made, there's still close to 2 billion that lack access to an account or mobile money provider. And what's really important to emphasize, especially within the context of India, because this has been one of the big challenges, is that while we may be able to increase access, we still are facing challenges in terms of usage and account usage. Globally, 1/5 of all accounts are still inactive. Further, we need to point out that not all financial services and delivery channels, whether that be bank, non-bank financial institutions, mobile money accounts, are equally effective in reaching the development goals. And so we have to think about not only access and usage, but the delivery channels. And also we have to think about who it is that we are trying to target. And there's been a lot of focus and discussion around marginalized groups, and especially those living in extreme poverty. And I've listed some of those here on the slide. These are probably no surprise to all of you. So let's think about digital financial inclusion within the context of the T20. So Dr. Adams mentioned that I've been a member of the T20. For those of you that have not heard of the T20, basically it is the think tank for the G20. And so we provide the policy recommendations primarily around the SDGs to the G20 leaders to help set national agendas and strategies of what the countries should work on for the coming year as goals, especially in terms of international policy and multilateral collaborations. This past year, so last year I served on the T20 under the Japan presidency. This year it was under Saudi Arabia. And you can see there were originally 10 task force, but when COVID hit, we added an 11th for COVID. And you will see that Task Force 6 is economy, employment, and education in the digital age. And so both under Japan and Saudi Arabia, this was the task force that I've been on and contributed to the most. It's all been about financial inclusion in the digital age, but also making sure that we're bridging the digital skills divides, especially among the most vulnerable. This past year, I worked on 2 policy briefs in particular with Josephine Kashana at St. Joseph University of Beirut in Lebanon. And so we were working at looking at how to improve for forcibly displaced populations, financial inclusion, and livelihood using digital financial inclusion, and also trying to think about a human development approach to digital livelihoods of vulnerable populations. So we were working when COVID hit, and that really did change everything, especially for our task force. If you think about it, we already knew that we were moving towards this digital model, and we were already moving towards digital financial services. But we still thought we had 3 to 5 years, especially to help the vulnerable populations reskill, retool, upskill, whatever they needed to be ready. And COVID hit, and this has just accelerated it. And we don't have the luxury of having that time anymore. And the gaps that we were anticipating have all of a sudden, magnified. And we see them especially in the developing world. So we've had this shift very rapidly to digital financial services. Fintech is moving at an even more rapid pace, trying to figure out solutions for accessibility and affordability, especially since we're moving towards cashless economies. With COVID, mobile money has taken center stage, non-bank financial services, these alternative financial services, which oftentimes within financial inclusion, we've been trying to get them access to mainstream bank accounts, and that has been the push. It's coming back that these non-alternative financial services are actually just as important. And we're seeing greater emphasis placed on them right now because they're leapfrogging ahead of the conventional banking services in providing solutions during this critical time for people to make daily transactions. So there's been less emphasis we've seen on the traditional bank accounts. With this said, okay, we like to sometimes make claims, saying that financial inclusion, digital financial services are helping to reduce poverty and helping us to achieve the SDGs. We make linkages all the time, but yet from a research standpoint, there's still a lot that's unknown. And we don't have a lot of good, solid, rigorous research to actually document if there is direct causality and what the direction of that causality is. And so really the question that we all want to know is digital financial inclusion a viable mechanism to reducing poverty and achieving the other SDGs? And what role can and must we play? So for those of you on listening to this talk who are researchers, policymakers, or from multilateral organizations, NGOs and such, this is what we're trying to figure out, is what role can we play in trying to see, leverage these digital tools and see that this happens. So ultimately, how can digital financial inclusion be used to help people around the world build resilience, create sustainable livelihoods, and establish long-run financial security? So in the remaining time that I have, I just want to briefly touch on 5 key opportunities that I see for us. from what I've learned in working on the T20 and in working with various countries in different parts of the world. I'm going to touch briefly on each one of these points. So opportunity one, starting with the fintech ecosystem. So we need to really take a look right now at the direction that fintech is moving. Are the fintech-driven improvements in the availability of financial services promoting demand and usage of those services? So that we can see, is what's being offered on the supply side really helping to solve the problem? Because a lot of times we have the technology ahead of the demand or anticipating demand, but we really need to think more carefully about the supply side access and the demand side usage of digital financial inclusion, especially for those most vulnerable. And if we are putting together the right tools for them that they need right now so that they can be active and vibrant participants in the digital economy that is emerging. And so from this standpoint, we need to be paying particular attention to taking stock of current and future fintech disruptors and what is currently there and what is coming down the pike, and how these linkages between the supply and demand side are going to work. Opportunity two for us is thinking about how we're going to bridge this rapidly accelerating digital skills divide. So we already knew that we needed in place programs and initiatives to help, especially the most vulnerable, increase, upskill, reskill, retool their digital skills and training just in general, from employment standpoint and other aspects. But on the financial inclusion side, so I work in the financial literacy space, we are right now undergoing this rethinking of what it means to define financial literacy within the context of digitalization. And we've got three components here now that have emerged. We've got financial literacy that we've always had, so those concepts are not changing, but now we have digital literacy. So people need to know how to use the devices to access digital financial services. And so that's the last part. We have digital financial services that people need to be able to use. They need to be able to link their financial literacy with their digital literacy to be able to do that and to use those types of services. The other part of this that has taken center stage is consumer financial protection. With these rapidly developing new technologies, fintech disruptors, it creates a lot of risk and a lot of vulnerabilities in the system for populations that are already excluded, disadvantaged in certain ways. We have to be very careful that we're protecting them, that we're also educating them to protect themselves and to not get taken advantage of in terms of scams and things like that. Okay, so opportunity two, we need to bridge this digital skills divide. Opportunity three, leave no one behind. So this one, I think I've touched on here in a number of respects already, that it's imperative we reach vulnerable populations and place our emphasis there, because this is where the gap is rapidly emerging. So we want to think about who's at risk, where specifically those digital divides and vulnerabilities are, how can we best reach them? We think about these in terms of access versus usage, the delivery channels, and keeping in mind that not all access is equal. And we also, sometimes we forget that sometimes digital financial services is not the solution, that maybe there are still some populations that need the traditional access, and digital solutions are not quite there yet. 4, we're almost done here. So 4, shift to people-centered design. So I alluded to this with the first one, that we need to think about the products and services on the supply side that are being designed. We need to make sure they are being demand-driven. And we need to think about the products and services from the human-centered perspective, the user. We need to create products, services, programs, policies, all within the context of digital financial inclusion that makes sense in people's everyday lives and how they're going to be interacting with it. We need to think about the digital dividends and benefits for people and be able to communicate that to them, to encourage them to adopt these services, especially for populations that may feel uneasy or do not trust them, don't feel comfortable with technologies. We can do this too by helping them to identify digital pathways about how using these services are going to make their lives easier and more convenient and give them greater access to the economy and society overall. So this needs to be demand driven from the development side. And so supply needs to take that into consideration. And then I'm not going to say much here because of the time constraint, but we need to expand government interventions and relax regulatory environments to get some sandboxes to be able to test out these things to make sure that they're meeting the needs. And then the last one, and then we're going to wrap up here. The last one is just, we need to build digital livelihoods and long-run financial security for all. I mean, that's ultimately the goal that we're working towards with digital financial inclusion. And what this means, so this was part of one of the policy briefs, this circle here that Josephine and I worked on the T20, about trying to think about, from a holistic approach, we need to think about digital financial services within the context of every aspect of our lives: education, health, work, personal security, social inclusion, civic engagement. And then think about how that can help us to achieve the Sustainable Development Goals. So we want to develop interconnected digital finance solutions that address the complexities and numerous aspects of what we're engaging in every day. A holistic human development approach. So the remarks that I made today hopefully tried to hit on some of the key things that we're working on. The T20 now has transferred. It just transferred a few weeks ago to T20 Italy. So we will be in Europe this coming year. I've highlighted some of the work that I drew my comments from in things that we've been working on this past year, from research and policy. And I hope that you found some of these remarks helpful to your own thought processes and strategies and agendas that you're thinking about for the coming year. So I want to thank again Dr. Adam and everyone with the conference. I'm very grateful for this opportunity to share some thoughts.
Thank you so much, Professor Angela, for your insightful and informative presentations that you have shared with us. Certainly, I'm sure that our followers, they have got lots of ideas of research, and so they will after this session, they will start writing new papers on our topic. So now I would like, please, to call Professor Tara to give her precious inputs and insights on our session topic.
Thank you, Dr. Adam and Dr. Leonza. It was an absolute length. I must really thank Dr. Adam for giving me this opportunity, and it was a wonderful sort of laying of larger issues and context by Dr. Leonza, and I think I must thank her too. And in some ways, what she sort of elaborated here gives me the kind of a reason and context to place my thoughts on a specific case where I thought it's important. It's important because, the contexts are different. The structural institutional constraints are different, and even the pattern of, sort of evolution and development of the financial sector has been different across, across the globe. So I thought it would be very interesting to present in front of you what I have sort of been studying, about India and India's digital, financial transition. And then let me see whether I can really take up. And I think some of the issues that I have in mind really resonate with what Dr. Leonza actually has already presented. And I just, imagine that we can have some sort of a convergence of, topics there. Yeah. Let me share the presentation now. Yes. In India too, digital financial or digital technology driven financial inclusion is somewhere, in some way is seen as the culmination of a long evolving program to build on an inclusive financial system. And I think it's important to trace the trajectory of financial inclusion initiatives in India, since 1960s, but at least over the last one decade, where we saw accelerated sort of efforts and initiatives to, to work on digital technology space, in terms of, financial provision and accelerating demand and things like that. And it's also important, maybe I thought, to understand this trajectory because then we would perhaps understand, or we would appreciate how, this process has mediated the space already sort of, has a lot of social policies, etc. And at the same time, given that the Indian economy is straddled with very deeply embedded structural institutional maladies. And I think Dr. Leons has already really mentioned about the kind of structural rigidities that societies and countries have across the globe. So that's the reason why which I thought I should kind of present some of these trends in front of you to have a meaningful appreciation of how digital technology can transform India's in financial inclusion program. India is a late bloomer in terms of adoption of technologies in the banking and financial space. The earlier innovations were all centered on increasing the efficiency of operations, etc. And like it was in the 1990s that mainly through the efforts of private and foreign banks, India started introducing technology-enabled products and processes like phone banking, internet banking, now mobile financial services, etc., etc. And we must appreciate that, we must understand that aided by technology, a lot of banks and financial institutions have diversified themselves into businesses like investment banking, mortgage financing, credit cards, etc. So digital technology has transformed Indian banking in other ways also, not only in terms of financial inclusion or inclusive finance. Some of the, even before the financial inclusion became a buzzword in the development literature, banks and financial institutions in India were very much part of the social policy architecture. Recognizing the inherent tendency of financial institutions to, be biased towards, profitable sectors like trade and large and urban industries, the state and the central bank they introduced several measures since the 1960s until the late 1990s to urge banks to expand their reach to rural and priority areas. So a large number of measures you could see, from nationalization of banks to priority sector advances, the instrumentality, social banking emphasis, expansion of rural branches, specialized apex institutions, specialized banks, targeted credit programs. A host of initiatives and institutional alternatives were introduced through these 3 or 4 decades to kind of make a kind of an inclusive financial system. But some of these instrumentalities lost their relevance since the 1990s, with the emphasis shifting towards efficient, competitive, and profitable banking. And the social banking objective was hived steadily off the mainstream banking agenda and put largely onto the informal sector, like, for instance, microfinance and groups and things like that. So since the mid-2000s, the official strategy of financial inclusion was led by banks. We call it bank-led financial inclusion. That's how we characterize our inclusion. So the basic individual bank account is a central instrument that can really sort of facilitate multiple fund flows into an individual's bank, financial lives, savings, credit, overdraft payments, transfers, etc., etc. And the idea or the imagination is that this individual bank account, ownership of this individual bank account, would facilitate smoother financial transactions for excluded and excluded households. And benefit transfer in the case of India, benefit transfer in the transfer of government to individuals, government to person transfers is the main mode of operationalizing these accounts. So bank accounts operationalized through a transfer of benefits. So I'm just explaining these things to appreciate what kind of digital technology adaptation is happening. What is the context in which digital technology is getting adopted in India's financial sphere? Sorry. We see an accelerated pace of digital technology adoption in the banking sector since mid 2000s onwards in the case of India. And of course, successive governments since then have tried to leverage the technology, especially the digital technology, information telecommunication technology, to create the infrastructure for financial inclusion. So a kind of a financial inclusion infrastructure, digitally enabled infrastructure, has begun to be sort of put in place since mid 2000s onwards. And two innovations are very critical in the case of India. One is the gradual building of a payment architecture, which was never there in India. It came to India only around 2000. We were largely depending upon, overseas payment gateways and things like that. But 2000s onwards, we see that our payment architecture, which is very significant. And if you really want to digitize payments, then you need to have a robust payment architecture in place. So we started working on it from 2000s onwards, and our, unique identification project, which is known as Aadhaar. The coming together of these two innovations, the payment architecture and the Aadhaar architecture, enabled India's kind of digital foray into the financial space. And several other spheres of normal life, but finance also was a major area where this combination started working. It became a kind of a foundation. This kind of a coming together of two innovations became the foundation of India's much celebrated success of digital financial inclusion in the 2010. So it's extremely important for us to really understand how these structures work. And it is this architecture which made it possible for the state to roll out the digital benefit transfer program since 2023. And this really received a fillip with the Prime Minister's Jindal Yojana, which was a kind of a national mission for financial inclusion, we can say. The foundation of which is universalization of bank accounts using branches and agencies. So, we are really entering into an accelerated pace of digital financial sort of inclusion. And we know that Jindal accounts, Jindal program, JDY, is kind of celebrated the world across as a very major sort of a success in terms of financial inclusion. And, the coverage has expanded phenomenally, and I think the whole world has appreciated it, and it got got recorded in the Guinness Book of World Records, etc., etc. But the expansion happened largely and mainly due to large coverage of the benefit transfers, as I mentioned earlier, the government to person benefit transfers. But what I need to emphasize here is that if you really look at the benefit transfer performance since the digital technology initiation or introduction, is that within the rural development sort of a transfer, using the digital platforms and digital accounts and things like that, the relative share of schemes that are targeted at the poor, like the employment guarantee scheme benefits or the cooking gas benefit, that share has steadily declined from 56% to just about 30%. So though we have adapted digital technology and we made a big sort of a story out of it, the program actually somehow seemed to have gone biased towards other programs and not the programs which really are targeted at the poor. And this is something which we need to really sort of take note of. The payment sector in India has expanded phenomenally over the last 12 years or so, catalyzed both by global and domestic initiatives which aim at transitioning towards digital transactions. We know that there's an international collaborative initiative, the Better Than Cash Alliance, created under UNCDF and the kind of USID project, the Inclusive Cashless Payment Partnership. These two have played a very, very significant role in terms of making India's digital transition, operationally successful. So a lot of interesting terms we started started circulating in the environment, like universal financial inclusion to end economic untouchability in India, a term that we keep hearing a lot. Exponentially increased cashless payments in certain geographies, or the JAM Trinity, that Jan Dhan Aadhaar mobile platform Trinity. So these are some of the sort of terms and concepts that we started getting familiarized ourselves with in the last decade or so. Major changes since 2015-16 in payments and settlement system, emergence of, I think, we mentioned about fintech and fintech players in Professor Leon's kind of in a presentation too. A host of private sector players, more than about 120 of them in India recently. If I rely on 2016 statistics, they are they're present in the digital kind of financial service space in India across sectors like automated teller machines and point of sales operators, transaction gateways, platforms, online mobile wallets, remittance service providers, cash card operators, Bitcoin wallets, and large number of them have emerged since 2015-16 or so, and huge investments are flowing into this sector. Like we know that Paytm alone is able to attract huge amounts of investments into in the investment space. Yeah. And again, I must say that, the open API, that is the application programming interface policy that, which is I think, a revolutionary sort of innovation in the payment space, because API really allows a kind of a democratization of, financial services. I think it's an open sort of programming interface. Anybody can really latch onto it to be, to provide services applicable to. So I think in terms of an innovation, there's a very major sort of a step in the case of India. In the case of for instance, digitizing payment structure further in the case of India. Aadhaar enabled payment system, which is known as AEPS, which also is a very very important enabling sort of an innovation which was introduced in India over the past 5 years or so. United Payments Interface, again, a very significant sort of a technological innovation that India has really kind of been able to do over the past. So what I'm trying to say is that the space is extremely, extremely dynamic. And the financial technology sector in India is perhaps one of the most dynamic in terms of growth and, in terms of investments, in terms of startups, and in terms of venture, in terms of entrepreneurship and all that. So it's a very vibrant sort of a space. And demonetization in 2016 November became a big nudge, to shift the financial system towards more accelerated growth of plastic and digital payments. So though several other reasons are attributed to, or I think finally what it managed to achieve is actually nudging people to plastic and digital payments. And I thought it will be very important to really quickly, I think I'm extremely sorry if I'm taking a lot of your time, but I thought it is important for us to really look at some of the data which really gives us some insights into to the direction in which digital financial concerns in India are going. So I thought 2011-12 to 18-19, I'll really present in front of you some data which I've been working with of late. If you look at it, you can really see that 2016 onwards, there is a tremendous sort of progress in these kinds of technologies, ATMs and point of sale. So I think point of sales points is a very important indicator of digital, the use of individuals of digital transactions, and that's the interface through which people really sort of not for either for financial transactions or for commercial purposes. So there's phenomenal increase in the growth of the number of ATMs and point of sales kind of data in India. If you look at the plastic sort of a money, then if you look at the credit card and debit card transactions, we also see that the engagement of individuals with these instruments has definitely increased over time. So which means cashless transactions have been on the rise. There's a sharp rise in the number of outstanding credit cards compared to debit cards. That also tells us that debit cards are linked to bank accounts, credit cards are actually loan accounts. So the use of individuals of those kinds of cashless transactions and cashless instruments has shown a significant rise in the case of India. I just showed, I thought I'll just show you visually how the credit card transactions in volume and value has increased. If you look at, this little graph, which is, constructed on index, I calculated the index of, growth and then plotted them. The number of credit card transactions and the amount of credit card transactions, if you look at, the yellow and the gray line say number of credit card transaction, number of debit card transactions. It's the gray and the blue lines. It simply tells us that the credit card transactions are way more than the debit card transactions. So people are really dealing with that kind of an instrumentality. The yellow and the red lines tell us the amount of transactions. That simply tells us that the amount of credit card transactions is again far greater than the amount of debit card transactions. So bank linked accounts and credit, cash credit, through credit card instrumentality, we see a kind of a interesting pattern. Maybe the bank accounts are cards linked to bank accounts is used less frequently than the credit cards, the cash credit sort of instruments. Again, this tells us that the number of credit cards really has far outpaced the growth of debit cards. So people are, we get to see that individuals are really engaging with cashless transactions. Absolute size of both volume and value of transactions, even in the newer modes of payment, like the prepaid instruments or the mobile payments, I am talking about the absolute size of both volume and value increased substantially after 15-16, but they still constitute a minuscule share of the total transactions. They are not really grown as part of the volume of transaction. The value of transaction, the volume is increasing. More and more people or more and more transactions, I would not say more and more people, more and more transactions are happening through that mode, but the value of that transaction is extremely low, as a share of the total transactions. If you look at it, this is a representation of that. If you look at the share in value of transactions, it's actually sort of, it's not, and I think, it's the other way around. The volume of transaction has increased, tremendously after 2015-16, but the value of transaction actually it's less than 1% if I look at it. In volume, it is about 35% as of now, and in value, it is just about less than 1%. So, there is definitely in terms of inclusion, if you want to see more and more people or more and more accounts or more and more transactions we see, but it's really not very impactful when it comes to, the value, value of total banking business or financial business. Digital lending is emerging as a big business in the country. I think Dr. Leon's really referred to that because these are very important platforms that connect lenders and customers. We have about 225, 230 digital credit platforms in India as of 2017, which has definitely increased now. We see a lot of new partnerships emerging in the digital credit sphere, like banks are joining with mobile players and, like e-commerce players like Flipkart kind of players are getting into the digital financial provision, space and things. So very highly innovative partnerships, have emerged over the past 4 or 5 years. And several factors drive this kind of an innovation. We know that the smartphone user base in India is very high. That penetration has been extremely high. Banking infrastructure and payments infrastructure, as I told you, has definitely grown very significantly. And now we have a identity authentication sort of a mechanism through Aadhaar and KYC and UPI and all that. And our payments infrastructure is sort of strengthening very fast. We have instruments like UPI, Bheem, and electronic cash transfer interfaces, mobile wallet, QR codes, and we are really using all these instrumentalities right now. And we have the great advantage of so-called demographic dividend in the sense that the younger, age population dominate the Indian demography. So, which means we presume that people would become more and more familiar with these kinds of devices and technologies as we go along. Customer behavior has also changed significantly because we are so used to Uber and Amazon, new customer awareness and engagement and things. So there is also social learning as to how to use some of these platforms and the benefits of it and interactions with them, etc., etc. So that also has been happening over time. Clear advantages. Digital credit has clear advantages. It's very cost effective compared to documentation heavy traditional banking, which is very expensive because we have high acquisition processing costs involved in traditional banking. Customization, theoretically speaking, customization of products to specific customers is very easy in the digital credit space. And using machine learning, AI, etc., we can even have, we can enhance your efficiency. Managing recovery is much easier. Surveillance is much easier. We are seeing a lot of, players using AI and machine learning significantly. Even in microfinance space, you can see organizations using, real-time heat maps to really check who are defaulting, which geographies are defaulting, etc., etc. There are new ways of assessing different forms of risks, that has become possible now, because you can really factor in things like transaction behavior of individuals, location-based data, store-level inventory details, voice and image for information. A whole lot of, risk management mechanisms are now available thanks to digital technology. Again, of course, credit risk scoring, which is coming out as a big thing in India. Credit bureaus are, very active these days. Early warning systems, digital. Foreign. You look at any of the fraud which happens in India, financial fraud. You can see how developed our digital forensic capabilities are. So we have built on a lot of digital capabilities around the financial services provision kind of an activity. But there are certain critical questions I think we need to really. I'll just complete in about 2 minutes. I think I'm so sorry, Dr. Adam, if I've taken more time. There are certain critical questions like, do digital finance platforms promote inclusion, or they create new forms of exclusion? Do they include everyone, or they create islands of exclusion? Exclusion has become a little more, technologically defined these days. As I told you, maybe we can discuss it later. Will large-scale rollout of digital credit offers create privacy sort of, threats, especially in the absence of robust customer protection and regulatory safeguards? Again, a point actually Professor Leon's is actually to kind of referred to. So shouldn't we really look at customer protection aspects, regulatory safeguard aspects to be able to, before we get into this large-scale rollout of digital credit offerings? And what kind of intermediaries are going to emerge in this in the financial space? Because in a country like India, information asymmetry and illiteracy is widespread. And let me also tell you, co-ownership of devices is very, very widespread, in the sense that I may have transferred, I have used for my banking transaction a device used by someone else, so owned by someone else. So there is a lot of data sort of, mismatches in those kinds of, so you use a lot of, device-centric information to profile me. You may be really doing a wrong thing, because I really do not own it. A lot of women in this country do not own a mobile device. They use their husband's or children's mobile phone and actively engage in these kinds of things. So we have really not, addressed some of these fundamental structural sort of deficits, as far as, India is concerned. Privacy harms, to me, is a very, very significant aspect, I think. There are what we now know as networked privacy harms, in the sense that just look at, this group-based financial interventions. Because one person, one user, misbehaves or badly sort of deals with the system, now there are devices to exclude the entire population, entire community from financial sort of services. That's what we see with several microfinance who are sort of digitally mapping the red zones in their catchment, customer catchment. They are almost sort of avoiding to enter into areas where 1 or 2 people have a tendency to sort of default. So that's easier now with the technologies to keep that constant surveillance on. So network privacy harms is a possibility. And low-income adults, we must understand, who rely on devices and apps, may be more vulnerable to surveillance, because they really don't know how to, what an app means, and what downloading an app onto my mobile actually means in terms of, what does that, what does it lead to? I have absolutely no idea. They're also exposed to forms of commercial data collection, because very often they knowingly or otherwise fail to restrict access to a lot of things they post online, because I really do not know. Again, if I link it up with Professor Leon's argument, digital literacy. It's not only financial literacy, digital literacy. So sheer, lack of that can really create a lot of privacy harms. So this can actually affect not only their private lives, but their education, employment, law enforcement. Because even the police and the law enforcement mechanisms are increasingly using these kinds of recognition mechanisms, technologies. And so privacy also, even on the understanding of privacy, we really do not understand what privacy means. Very often we understand privacy as secrecy, and that's so privacy must be understood as contextual integrity, in the sense that you should be aware of appropriate information given that can be given to an appropriate context. So there is actually a link between the information to be given and the context in which that information is going to be placed. So that's a larger responsibility, may not be understandable to a large number of people who are already suffering from information poverty and illiteracy. So that's to me is a very significant sort of. So there are serious ethical considerations in that sphere. So differential impact of regulations must be assessed in countries like us. How does a regulation impact different populations, different sections of populations differently? Women, maybe the kind of men, women, people are located, and people located in certain kind of geographies, remotely located individuals, households. So we need to really calibrate the regulatory sort of space to suit the appropriate or to make it appropriate to the threats and interests and the limitations of different kinds of segments. Personal data protection measures must be designed, and class vulnerability, that's also a very important thing as far as India is concerned. So in conclusion, I would say that India definitely has made great strides into the financial services sector. Let me just, as I told you, Aadhaar infrastructure and the payment infrastructure, they're coming together, has been the most significant technological innovation in the digital finance space as far as India is concerned. And all these developments put India in a leading position with respect to digitization of financial services. There are clear signals that many of these, things have not, many of these progress, much of this progress has not translated into effective financial transaction. If you look at global fintech's data with all its associated limitations and problems, for the year 2017, with such large ownership of accounts in India, only 7% of individuals above the age of 15 could avail credit. So you talk about saving accounts or owning savings accounts, but only 7% in India still can access loan from banking institutions, formal banking institutions, or quasi-formal banking institutions. So there is actually a clear divide between, you put your money in a bank, but you are not going to get a commensurate attention when it comes to your need for resources to maybe run your informal business or your economic activity and things like that. Some of the other concerns like this, financial inclusion accounts have consistently had low balances in them. As I told you, the volumes are increasing, but the value is definitely not increasing. So let me conclude this way, or let me put a little thought for further sort of deliberations. That is, what we experience in India in the name of financial inclusion is partial extension of financial services. And to me, extension of financial services is not equivalent to financial inclusion. And we have included some conventionally non-bankable population, but we have not really been able to achieve anything which can be really sort of seen and experienced as financial inclusion. But at the same time, we have disproportionately expanded the digital ventures, and which are often financed by global capital. So there is definitely a significant growth of fintech sector in India, ventures which use financial, which is working in the sphere of digital financial delivery, but at the same time, maybe there is no commensurate inclusion that one could see in the case of India. So I would just say that maybe at this point in time, I'm not saying we are not walking towards that, but as of now, if I take a kind of a stock taking of what's happening in India with digital financial inclusion space, I would say that it seems to have benefited financial players much more than those who have been historically excluded from financial services in myriad ways in India. Thank you so much.
Thank you so much, Professor Tara, for sharing with us this informative presentation about the Indian experience in financial inclusion. So you have really taken us into journey with the Indian experience, and so we really appreciate your presentations that you have shared. So we have only now limited time, but I have two questions. So I would like to ask Professor Angela and Professor Tara these two questions, starting by Professor Angela. From your point of view, how will coronavirus change the global microfinance industry? And can we say that the COVID-19 is having like a positive impact on accelerating the financial inclusion?
So I'm not sure which one to tackle first. I think the second one, I think I touched on, that I think that we do have concerns that it's not accelerating financial inclusion and that we're taking some steps backwards because the gaps are just becoming bigger. And there are people that are getting left behind because digitalization has just sped up. So we have to work overtime to make up for those gaps now as quickly as possible. And I just don't think it's going to happen because we thought we had more time. So I do think there's populations that are at risk about that. And then the first one on the microfinance side, it kind of depends in general which area of the world you're looking at. And the country you're looking at and the policies that are being implemented right now. I think if we think about the micro enterprises, you know, which in the developing world are often so directly linked to also the household finances, because a lot of times the business is directly linked with the family and the family expenditures and savings. What I have concerns about is if you're pouring that money in, I think the concern is, as I mentioned previously in the other session, about these non-performing loans. And the banks, you know, are giving this microcredit, or these NBFIs are giving the microcredit, and then, you know, there's going to be a lot of businesses that are just not going to survive this. And then you have to think about and sectors too. That it also depends on the sectors we're talking about with microfinancing. Some of them it makes sense. I think we have to think about on the microfinance side what the challenge for governments and the policy leaders is trying to think about where do the injections need to go and are going to be probably most effective. And there's some sectors, some segments that are just that, you know, they're just not going to make it, unfortunately. And so then you have to think about then the long-term plan, I guess the immediate injections that are needed, and then the longer-term plan, like how do you help some people rebuild? Maybe they have to even jump into different professions. You know, we think about the gig economy and things that are emerging there, and some professions that might not, you know, I think India, I just a side story, I have like this connection to the drivers on the Uber and Lyft, or you guys don't have Lyft. It is the Uber, and what is the other one? There's another company, but okay. So I'm very worried about, like, in particular that industry. You know, what are those drivers going to do? You know, as we get self driving cars, and then on top of it, you know, with COVID, people are not taking the drivers; they're finding alternative means to get around. So I'm just picking on one of those, but there's restaurants, retail, clothing. So I will leave it there.
For Professor Tara, I was reading the question in the chat box. For Professor Tara, my question is first as the same question as coronavirus impact on the microfinance, but in India, the microfinance industry in India. Is it going to be having positive or negative impact, as maybe in developing countries, the challenges, they are different? And second thing is regarding the women empowerment. So can digital financial services can help in breaking these gaps that is that we are suffering from in developing countries, we as women, and it can help in empowering more women more. Especially, you can give us your insights about the Indian case.
Thank you for the question. Indian microfinance industry has degrown in the past 7 months.
I think that.
Oh, sorry. Yeah. I can't hear without it, but I can always speak without it. Yeah. I was just trying to say that, in the case of India, the overall microfinance industry has definitely grown down. It has degrown over the past 6-7 months. Portfolios have really come down from, maybe by about 25%, 30% even in the case of larger microfinance industries. But microfinance cannot survive without giving loans. That's the only way they can actually augment their capital. So they keep what they're doing is that after the moratorium was over in August, all of them, I think, have taken a kind of a stand that they will definitely keep lending to their different market segments. Otherwise, the clients will go away, and that will be a greater danger. So we also see that the pace of on lending has not really gone down, but the portfolio sizes of MFIs have definitely come down, and some of them have really become very small over 6 or 7 years and 6 or 7 months this time. And I also understand that some of the rural areas, in the case of, I think there's a rural urban sort of a difference in India, maybe like in certain states like Odisha, the rural portfolios have not been affected very much because to some extent the villages could be insulated from the kind of job loss and things like that, because anyway this is largely a locally networked economy and nothing much really happens with the urban areas. But the urban informal sector, which we ourselves have done a kind of a follow-up study in Ahmedabad slums in June, July, August. We found that job losses, we found significant degree of reduction in income, and non-payment of loans. Almost all of them have stopped their installments. And at the same time, they were aware of the fact that when they start repaying, they will have to actually pay the interest too. So their burden was not really coming down. But I see, because I also sit on the boards of a couple of MFIs, I see that investors are very, very interested now, even in coming and investing in some of these organizations. So social impact investors are coming. So the better performing MFIs may really pull on with the support of. But let me also tell you that maybe the microfinance industry in India is also going towards a kind of a crisis, because we really hear a lot of instances where organizations are whitewashing their books because they want to hide their losses, which I think is a moral dilemma. It's a moral a crisis for microfinance sector. So that's how I think I'll stop my observations there. And about women empowerment, I think it's a very interesting question, because we then need to understand what does it mean, what does digital empowerment mean for women. And I think my question is that my experience is that women really do not own digital devices as much as men do, which is a major a structural divide between men and women. I think even, and when you come to adolescent girls, they are even, some of these rural pockets, they are plain prevented from owning a mobile phone for reasons of safety, honor, moral pressures and things like that. So we have a huge digital divide in terms of gender in India. We have not done anything significant with respect to bridging that. And I earlier mentioned about this, device ownership. It's a very interesting variable in understanding, our decisions about digital technology adoption. We very often do not understand that you are creating a psychometric profile of someone who actually does not have ownership of that device, someone else. Or your or the device ownership or device, the behavior of a person as learned from the device centric methods is going to take you to a very wrong direction in terms of who is who. So, so the ownership of digital technologies, and of course digital. Now, I think digital literacy, I think women would be far better. I think because the ingenious ways in which they play around with this technology would be very, because maybe they are they're downloading recipes because that's what the public private sphere they are familiar with, but there's a curiosity among women to understand digital technology. And now many of the social organizations are using are employing women to this data collection through smartphones and all that. I see a lot of women who are absolutely smart at doing that, and middle-aged women picking up that skill. So I think the skills and understanding of digital technology, we will not see much of a gender differentiation, but we have a lot of structural factors which which create a divide between men and women. So I think empowerment, theoretically speaking, digital technology is a good thing, but we really do not know whether we will be able to create conditions where women can really use technology effectively and own that. Yeah.
Hey, but can I add to that?
Yeah.
That in the private sector, there is a whole market that's springing up now about digital financial services just for women, in thinking of, and looking at it from the human-centered design perspective of how women engage on a daily basis in the types of transactions they conduct. So they're doing consumer behavior research and marketing research about what is the consumer behavior patterns of women in terms of how, like what transactions they're making every day, how they're spending their time, how they are using their devices to be able to create a whole new kind of line of services and products, depending, I mean, some of it is varying again across different regions of the world and maybe country specific, but I find these very fascinating, that the private sector is realizing right now that there is a new market emerging on the women's side, and demand, it's being demand driven too. So it's very fascinating.
Yeah. Okay, so thank you so much, Professor Tara and Professor Angela. As we are running out of time now, and we are reaching the end of our session and our specific times that we have to follow. So I really I would like to express my gratitude, because you are always accepting my invitation, and you are having kind heart, and you are encouraging me. So I'm really thankful for you both for giving me your time and joining our fruitful discussion today, that our followers were on YouTube now. They are watching us. So thank you so much, Professor Angela Lyons and Professor Tara. Professor Angela is professor and director for the Center for Economic and Financial Education at University of Illinois at Urbana-Champaign in USA, and Professor Tara Nair, professor of economics at Gujarat Institute of Development Research at Ahmed Abad in India. Thank you so much. It's really great honor and pleasure to be with you. And of course, I'm extending my thanks to our audience who were following us today. Thank you so much, Professor.